All right, the S&P 500, let's take a look here for just a moment. S&P 500 near the highs, not quite able to take them out just yet. I do think that it is path of least resistance for the S&P 500 is to continue up. But we need to be a bit cautious because it is September, and we've discussed September for the last few months in regards to seasonality. Let me open up the Edge Finder here. So in terms of seasonality for the S&P 500, it is pretty well known that the US indices typically have a rougher month in September. Now remember that when you hear something like that on the internet, you should always be skeptical, and you should always remember that nothing is certain in markets. But if we take a look at the NASDAQ for an example, or we pull up the S&P 500, what you can see on both is that the S&P and the NASDAQ on a historical 10-year average basis, right, have moved down by 1.1% in the month of September in the last 10 years on average. Now, please understand, you have to remember how an average works, right? Let's just go back to simple math. That means that some months are up, some months are down, some months are down a lot, some months are up a lot, but the average here, when we take the average of all those monthly performances, comes out to about a minus 1.1%. Does that mean that at the end of September, we will see a 1.1% drop in the S&P 500 by that time? No. That just means that if we were to take the average, that's kind of what history would tell us about this month. So we've got to be a little careful about that, right? We've got to say, okay, so does that mean it has to be bearish month? No. Does that mean we should get super short? No, but shorts would be potentially preferable if you see the right setup. It just adds confirmation. Trading is all about confirmations. There's never a certainty. There's never a, I hear all this word about, I remember that being frustrating early on. Everybody would say, well, you need to use it with confirmation. And then it finally clicked for me. Oh, wait, nothing is a surefire indicator of what's going to happen in the future, ever. Nothing is a 100% predictor of what's going to happen in the future. So all we can do is combine things together to make up a picture that gives us a educated guess on what's going to happen next. I hope that makes sense. I just want to break that down here. You'll notice that the Edge Finder on the top setups page no longer has the S&P 500 and the NASDAQ as bullish setups. You can see NASDAQ drop down to +1 overall, and you can see that seasonality, that indication that I just discussed with you, is now subtracting 2 points from the overall Edge Finder score. I'm sorry, pink was a bad color here. Let's use yellow. So the NASDAQ's getting a +1 score overall because seasonality is dragging it down a little bit today. Now that we've entered into the month of September, where we just base our seasonality score here based on the average performance of the month, we say, let's be more cautious. Let's be slightly more, not necessarily outright bearish, but let's put some bearish pointage on the board here. Think of this, guys, as our whiteboard. This is our rubric, right? That's what the Edge Finder's entire purpose is in my own trading. It's my rubric for, when I go through these indications, the Edge Finder has its own way of algorithmically, categorizing, ranking, filing, scoring each one of these metrics automatically for us. Ain't nobody got time to go do all this by hand on a whiteboard. Are you kidding me? I used to do that, and it was really stupid to do it manually because you can just have it automated, and that's why we built this tool. So you'll also notice that seasonally, it's not the best month of the year for gold either. So here I am, guys. I'm long SMH, which might as well be the NASDAQ. They move pretty dang correlated. And I'm long gold. So am I going out and closing all my positions today because of that? I'm long gold, I'm long SMH, I'm long the S&P 500. Is it time to close all of those things because seasonality flipped bearish? And the answer is no, right? Not for me. Right? Maybe for you. You do your own thing. I'm not here to tell you what to do. But for me, the only way I close a position once I'm in a position is if it breaks structure. Because again, I use fundamentals to guide direction, but fundamentals are not always great for timing. Timing is where the technical side comes in. So when it comes to entries and exits, I have to have a fundamental directional bias, but then a entry and exit component comes from, again, the technicals. So for me, this level of support that got hit a couple weeks back ended up being a really nice area to start putting on some longs. I tried a few times before that and was dead wrong. So, transparently, this is not my initial first entry and I just called the bottom. No, I tried a few times before that and I was wrong and I was early. But we've got a good runner here. And with this trade, what's going to get me out? Is the edge finder going from a +7 or whatever down to a +1 on the NASDAQ? Does that get me to close all my positions? No. What gets me to close positions is the exit strategy that I use with my trailing stops. So I've trailed my stops here, guys, just below market structure. So for me, the S&P 500 is innocent until proven guilty. We're in a bull market. It's an uptrend. There's no reason for me to get uber bearish on this thing.
Market analysis, free trading courses, edge finder data, and special offers. What do these things all have in common? They're all available for you right now inside of our free Discord. You can click the link down in the description below to join the free Discord today and get access to all of this and more. Stay up to date with all the latest trading information and A1 content. And if you want to upgrade to our Gold VIP Discord that features every single trade that Trader Nick and our other professional analysts take, you can find the links for that in the description as well. So don't wait, go check out the free Discord today.
So I'm already in SPY. Here's a current look at all my positions. I have a couple individual stocks that I'm holding. I'm long gold, as I mentioned, which has come back a good ways on me. I'm long the Russell, I'm long SMH, and I'm long SPY. NASDAQ coming down here this morning. This one's chopping around. I think, we have PMI numbers coming out in just a bit here. 10 a.m., which could be impactful to many different charts. Get an idea of how manufacturing is holding up in the United States, etc. SMH down 4%. Yes, not a great day. So breaking support here. I do have, it's kind of hard to see on the daily chart, but if we open up the 4-hour chart, basically my stop is just below this structure here. So if we break the lows here, then I will be taking a profit on this one. And if we can hold this, then that'd be great. But we'll have to see what price does. But again, if we take out the lows here, that's going to be my signal to go ahead and get out of the trade. At that point, I no longer am very interested in holding it. What could be a positive thing for SMH would be as if it were to rebound here by end of day and hold this level, then that would give me a little bit more confidence in holding it. But I'm not going to hold it if it breaks structure. Like, it's just, I'll look for a better chance. I'll look for maybe a re-entry. But SMH is on the watch list. We'll see how it plays out today. Again, if you want to try out the Edge Finder, link is right there in the chat. If you're watching on Twitter, should be a pinned comment down below. You can apply for a trial there, join our Telegram. All those links should be there for you. Take a quick look at the Russell here this morning as well. Russell is doing better than the other ones. I love to see that. IWM, current position for me. Again, same concept here. I'm looking for a chance to trail stops on IWM. So what I'd like to see here, I'd like to see a break through the highs on this one. So if we get something like this, take out the highs, then great. I can take that stop loss and move it up here. I'm trailing pretty loosely on the indices right now because, again, fundamentally, I really still like them. I think that the soft landing story still makes a lot of sense. And until it doesn't, I want to stay in the trade. We've got support here as well. Whoops. Let's mark this as and 4-hour. So my stop loss is below this. I'd like to trail this stop tighter. But what I need to see here on IWM is taking out the highs. In fact, let's actually do this. I'm going to take this little dotted line. I'm just going to move it right there. So I use the dotted lines as kind of my resistance levels. Just a personal preference. Some people just prefer to use, zones, which is totally fine too. I like to use dotted lines because when something is trending up, I view resistance as kind of checkpoints, not as sell points, if that makes sense. When something is in an uptrend, like the IWM, right? Something's trending up. I don't like to put big levels of resistance, just a preference thing, because I'm like, these are not points at which I'm selling this thing. These are points where I'm like, okay, make a decision here. If you break that, I'm going to trail my stop. And if you fail out there and it is turning into resistance, we start trending lower, then all those zones will start turning red on my chart, because that's just the way I visually like to see it. I saw you had a couple yen trades this last few days, right?
Yeah, can you show me a screen?
Very nice. Look at all the green.
It's on the green, and that's one side of it, and the other one is when I exited.
Yeah, I noticed you taking profits yesterday, and I thought about you this morning when I saw yen pairs were coming back down.
Yeah, it's bang on peaks.
Yeah.
I was like maybe 10 pips or something different, but holy guacamole, it is falling. And I didn't take it.
You mean short it? You were thinking about shorting
it?
Yeah. Interesting. What's the concept for short side bias for you?
Well, of course it is the exit of the carry trade. But in my world, we hit target yesterday on major or most of the yen pairs, those pivot point things. And then 4 of them did, which you only need 1 or 2 for everyone else to start falling. But I did not expect this reaction to be that much. But by the way, I haven't posted it in the group anywhere, but I was expecting risk off this week, meaning peak on your S&P, dollar strengthening, yen strengthening, and what else? So maybe it's actually coming full circle now.
Interesting. Yeah. It's that's a lot of different nice setups that you had. And again, I noticed yesterday you closing trades, which was awesome because you had a nice reversal here. So that's the best feeling, is when you have a trade that hits, your target, or you tight. For me, it would be like when I trail a stop real tight, it takes me out, and then the thing completely reverses. It definitely makes you feel good. But we will see where that goes from here. So with the dollar yen, you mentioned kind of a bearish bias. So what are you looking for in terms of setups here?
Because euro yen, for that matter, like I believe we're gonna fall quite a bit. So at least down to this level, so 157. But dollar yen, well, there's a lot of pips on this dollar yen thing, but I believe at least down to the same low, which is down to 142. And I'm not projecting that. I'm more like, I think we're gonna fall until end of September. So whatever that price is, and more in terms of date, in terms of 23rd to 25th, that's where it normally bounces. So no matter how long no matter how many pips that is, or how many bottoms, because the problem is here is that this one didn't rise as much as the other yen pairs did. So this one has a very low starting point. Other than that is 500 pips. So it's a lot of move on doesn't look like a lot.
Yeah, it's been interesting. The dollar yen especially has been pretty weak. You've had some stronger bounce backs in things like pound yen, euro yen maybe slightly, but I know like Aussie yen that was one of your nice kind of big bounce back plays, which was awesome. So walk us through in terms of, so you had euro yen, dollar yen. Are you watching any of the non like maybe like Aussie yen or NZD JPY? Are you watching any of those?
Well, it was the whole group basically. If you take a really big rundown, I bought back here at, I can't remember which date I was. Back here. Oh wow, back here. Sorry, I bought here exited around 14th of August, give or take. So that would be that one. And then I bought again this 26th. Can't even put those ones on today, please. Thank you very much. And then I exited like that. So that's kind of how I've done. I tried to go higher, catch a pullback, and then go higher. It kind of worked out. It's not that great, but something in that direction. So at least I ended up not taking the range bound, but I was trying to kind of build the staircase on it, and it worked out quite okay. And also just remember, they have revised down the overall job creation that was last year by 800,000 jobs less than previously reported. So there is also a trust issue now with the reports. Are the data we're given that we are trading off, is it true? Is it actually reliable? That's kind of the question you have to ask yourself in that situation. So the economy is actually worse than we initially thought, and especially since jobs was the one holding everything up by itself.
Sure. Yeah, exactly. So we'll see. We got 20 seconds to go here, guys, before we get the manufacturing PMI numbers. We'll see if this moves the market at all. So bear with us. We'll do our quick breaking news. Be right back. All right, we got everything pulled up here. S&P, top left, NASDAQ. Let's see how this moves. All right, we got dollar index moving lower here. Stocks also moving lower.
47.2.
47.2, Ivan says. Okay, so 47.2 comes in basically right, slightly below forecast, but not by a huge margin. We do see S&P lower, NASDAQ lower, Dow Jones lower. Dollar index is actually bouncing a little bit here. We got euro, gold, oil's continuing to sink. Ivan, what's your reaction?
So first of all, it is below 50, and that's manufacturing, where services. Okay, so it's below 50. It is even worse than previous. So it is in line with rate cut coming in. Still weak. Yep.
And again, reminder, guys, that the manufacturing part of the economy is the smaller part. Services makes up the bulk of the U.S. economy, as well as like the UK, etc. Services-based economy for sure. That being said, any sort of this kind of goes in line with what we were discussing. A drop in economic data in any way seems to be making the market sensitive to the downside, whereas it used to be a good thing, right? The stock market would actually move higher on cooling data because that would prompt the Fed to cut rates. Now we know cuts are coming, so economic data sliding is not as exciting anymore as it perhaps once was. Dow Jones taking out the lows here of the day here. Gold continues to be struggling here. 24.80 or so just got taken out. And then you've got oil sinking to fresh lows. Ivan, have you seen oil? Have you been looking at oil at all?
I told people you should probably short it from 76.50. I didn't tell that way, but in my point was because there is supply issues now. People are pulling and adding and pulling inflation every day. So supply every day. But yeah, this is absolutely correct how it's supposed to be, because CPI is lower now, PMI is lower. GDP is a bit higher, and then China is having issues. So this makes sense for those who are wondering, this should be the bottom. Nope.
Yeah, that's a tricky thing to call here on oil, because again, it's really lost a lot of its steam. Price action wise, even you've had a one big kind of lower high here form, and some to follow here since. I mean, 71.31. That's a big slide in the price of oil. We were seeing this kind of range take place over the last several months, where it was pretty clear bulls were holding it right around 73. Now with the big slide here, my goodness, we got a fresh low, maybe heading back down to test the high 60s. So we'll keep an eye on that for sure. But yeah, that's I would agree with you, Ivan. That's a tough one to try and call a bottom on. If you're trying to dollar cost average into something, if you're looking at energy companies, that might be a different play. But if you are trying to talk about a short term or an active trade, that's like this is the low. That's a tough one for me. I'm with you on that one for sure.
And the reason why I mention it is because I can't prove to you it's profitable to catch bottoms, and it is number one retail mindset to do so. It probably is works for you, but I don't want us to one normalize it. Number two, agree to it. Number three, encourage such behaviors when I know for myself I'm never going to make money doing that. So
sure,
it's just that way.
I am thinking that seasonality is certainly a part of it. August was a crazy month, man. I mean, August 1st, 2nd, 3rd, huge downside. They spent the rest of the month clawing back. We finished at highs. Literally Friday, like Friday afternoon was just that last little push, but not quite enough to get to the previous all-time highs. So we were right there, just a little bit shy in the S&P. Still a decent chunk away from the Nasdaq. The Dow made 3 all-time highs in the last couple of weeks, and the Russell still hanging in there. So I mean, the charts are pretty simple. Let me just share my screen here. I think that we are looking at a range that continues to play out. So I'm going to get some trades in here, Nick. I've got some long puts that I want to work through. I just got filled for a $3 debit. I'm trying to get filled. It's probably going to go up a little bit higher right now. This is a SPY trade. So trading at 3. Let me see if I can get 305 for this. So let's go similar. I'm going to try to get a 305.
While you work on that, Chris, I'm going to just talk through some of the things I'm seeing too.
Okay.
So a couple things I'm seeing, as Chris just mentioned, Dow Jones took out the highs. It's the only one of the indices that is currently getting a positive score here on the Edge Finder. Dow Jones still getting bullish. What's interesting to me with the Dow is, here we go. We're entering into a phase. We are literally like the plane is starting to land, right? We are descending for landing. And what I'm talking about is the Fed's rate cut stuff, right? So I actually thought this was very interesting, and some of you may have heard this before too. During a soft landing, what has historically, during a period of time where the Fed has actually cut rates, what has actually done pretty well is value companies. And value companies are what the US 30 or the Dow Jones is all about. It's all about the big, stable, boring companies. And that typically has had a pretty relatively good performance during that time. So I am interested in the Dow Jones. I'm very impressed that it's so still near the all-time highs and that it was able to reach those all-time highs, as Chris just mentioned, despite the bounce back. We didn't quite see the S&P take out the highs. We didn't see the Nasdaq. Nasdaq is still, from here, guys, we're talking about a 7.5% move still to get back to the highs. So Nasdaq's looking interesting. The Russell also, very far from its all-time highs. We still got room there. But some things to think about here is that if you're watching like I am, things like IWM, the Nasdaq, the S&P, I'm bullish on these things, but I like to say something we say frequently on the show, which is cautiously bullish, right? You should probably just put cautious in front of any opinion you ever have in the markets, and then you're going to be better off. Like cautiously bearish, cautiously bullish. But I do genuinely mean that when it comes to these indices, I like the upside move potential for things like the S&P 500, but I'm not married to it. I'm not investing right now. These are not investments. These are trades. And so what that means is that I trade out of them if they don't act the way that I'd like to. The beautiful thing about being a trader is you're not subject to, buy, hold, and close your eyes and pray that it actually goes the right direction. Because the cool thing about trading is that the biggest advantage to trading is that you can employ some timing, which is easier said than done. But if we take out these lows, let's just say, this would be one of my favorite scenarios, would be if we see this market come down to support and just break it through, take out my stop loss, and then trend all the way down, and I can pick it up at lower prices again. That would make me feel very good, because then I just played the market very well, right? So that's where I'm kind of looking at this, and I'm saying I'm watching the market skeptically. As Chris just mentioned, we're in a bit of a consolidation zone here. We very well may stay in there. You might see this thing just go sideways for the week and up until NFP, and then maybe we get a bit more decisive move. But if we break these lows, It's time for me to take profits and stand to the side, especially with such a big question mark at the end of the week with that NFP report. Is that a good summary, Chris?
It's very fair, and I've got the micro E-mini futures up right now. I put on some trades last night. The nice thing about getting in too, obviously we had a holiday yesterday, so U.S. markets were closed, but I started to look out a little bit further. I'm trying to trade some of the seasonality. MES is it's a lot cheaper than trading ES. It's a lot cheaper than trading SPX. Plus, it's still open, so it's not quite as liquid as ES. But basically, what I did is I stacked up some seasonal long puts right here that I went out to November, which is probably more time than I need to go out. But for me, if we go, you can see here I have like the bear stack 11-15 expiration. So I'm just looking right underneath this current support, and I mean, we either, like you said, Nick, stay sideways where it just chops around in here, and then NFP is what possibly, breaks it loose one or the other. Look, I read an interesting piece this weekend that also suggests that we might be still looking for capitulation to the upside just based on just a straight up debt spiral where the Fed has nothing else to do but cut rates, and it's just going to make the market melt up even higher. I'm trading both ways, so I'm not really on one side of it. But expiration wise, these highs are out to February of 2025. Okay, and then these lows are out to 11/15 of this year. So if we stay sideways, I mean, technically, I would like to see a little bit of a pullback. Historically, September is a terrible month for stocks, and so if we break the floor, then sure, it makes sense to me that we pull back in this area. We have some good structure around this 5400, 5450 zone on the MES. That would be the equivalent on the SPY if we were to break this yellow box and head down to fill this gap at 545 or head down to this previous level around 540. So those are my two levels where if the bears can break out, we're likely coming back into 545 or 540. That would be where I'm looking to resume long positions. And from there, be a little bit more, I'd say, longer term, medium term of 3 months, 6 months, and then looking to see if we get that run to 590 to 600 by the end of the year. So one thing that is noticeable is everyone's wrong. Like every Wall Street analyst, every investment bank, every forecast has undershot where we are currently sitting on the S&P, and they just keep changing targets higher and higher and higher. And I'm curious what those newfound projections look like, because some are probably projecting current price and will just stay here for the rest of the year. Others are projecting still that maybe 590 to 600, I'm talking S&P, gets hit, or we possibly stay right in the middle. So again, it's a guess, and I'm just trying to figure out what makes sense in the near term. To me, seasonality, employment news, CPI news, all the stuff that's coming out before the Fed rate decision, the market's going to digest it. So for me, there's not really a lot of action here, and I kind of hate it because I'd like to do something. But the best part right now is probably to be patient and just wait and see what price wants to do.
Did you know we do a live trading show Monday through Friday with guests from all over the world? To get notified when we go live, click the bell button next to the subscribe button, or check in at 9:30 a.m. Eastern Time. We have helpful, free content in the description below and on our website, a1trading.com. Thanks for watching today's video, and we'll see you tomorrow.